working. Everything is working. That's right. Hey, that's good, man. Let's do it. Welcome to the closing beat, everybody. Happy Wednesday. How we doing out there? Hope all of you are having a good day. Been a busy day around here. Thanks, Jacqueline, for coming by. We've got a new client that decided to stop by. Come make sure we're real. You know, sometimes people just want to make sure we're actually here. And I always get the question, do you really have 4 fingers? What's going on there? Well, yeah, that's not an edited thing. Also, apologies, Jacqueline. I'm not cutting my hair until after Halloween. So my hair's all jacked up. You guys can make fun of me all you want there, but I want to be a rock star for Halloween. So I'll dress up, we'll do the show and everything. I got the tattoo sleeves and everything. So I'm going to go a little bit out of character. I believe Halloween's on a Monday, actually. So yeah, that's cool. Hey, fun fact, by the way, if you want to look, do we like our candy? I looked at this last night. Hershey broke out to new highs. Been strong all year, wildly beating the market. And Tootsie Roll. Look at that moving Tootsie Roll right before Halloween, huh? That's pretty cool. I don't actually know if that sort of thing is normal, but I will tell you, if you do want to know if that's normal, we have the tool available. You go into the research site. If you're a client, it's available to you. If you're a research member, it's available to you. You can type in the symbol and just see how often does this month or 1 month or whatever actually give a gain like that. You can even look forward and set your own criteria to show, like, what do you want to see what happens after that? So check it out. If you're a client of ours, we put it there just for fun because we do a lot of research on that. And so we figure we'll make the tool public so people can use it because it helps you determine if things are odd. If the market goes up 5% in 5 days, is that odd? Do we normally see that? Does the market typically drop 5% in 5 days? You know, you could see, is this an odd, weird kind of a time, or is this something I should be excited about, right? So kind of fun. You can take a look at things like that as you like. We have 2 weeks from today, actually. We should know, well, we'll hopefully know the results of the midterm election there to see who controls each chamber of Congress. You vote for how you need to vote. We can still be friends. I have no problem with that. But you kind of hope for division, right? And I say that because the stock market likes division, divisiveness, fighting, right? Nothing getting done because they can't make up their decision. Now, since last night's debate in Pennsylvania there, the betting odds have shifted towards Republicans for the House. And the Senate seems on track to be red as well. That would create division, right? So we don't need that to happen for the stock market. There could still be division by Republicans taking control there. But yeah, you kind of hope for that. And I'll show you why. We shared this with clients. I believe I shared it with you before. If you go back to the first day that the S&P was available and you only look at those forward returns from midterm elections, the stock market actually performs a little bit better when the U.S. government is divided. So you got a 10% return there as a median, 8% if one side controls or has control over everything. If you take out all the recessions and just wanted to see something a little bit different there, let's pretend we're not in a recession, the performance is still better with a divided government. This is a really simple way to show this, and I don't know why you can't see the camera there, man. That's pretty cool. I'm like invisible. Look at that. I don't know what to do. We'll go back over here. Division's good, right, for the stock market. You may not like it, you know, personally and everything that you're trying to have accomplished here in the country, but for your wallet, maybe if that's the way it turns out and you're unhappy, you go, well, the divided government, at least the market should perform a little bit better. Anyways, S&P, just as we talked about on Monday, this is an interesting time period here in terms of this week for the S&P. I'm going to do something a little different. We'll just look at a heat map. There's a heat map. It's all public. You can look this up too. But can you tell what dragged the markets down here today? Can you tell? Well, pretty simple, right? Microsoft, Apple, Alphabet, Amazon, and Facebook, which is going to be a little worse after hours here, right? So the rest of the market actually tried to do its thing. It actually tried to get this thing going and make some sense of the day there. But because of, well, those stocks that if you include Tesla in there, which was up 1%, but if you include Tesla, you've got over 20% of the entire market cap of the S&P. So you can see clear as day what weighed on the markets today. If you look at your portfolio and you have a diverse portfolio, you're going to go, it wasn't actually that bad, right? Because you only have some Microsoft, Facebook, and things like that. But everything else kind of did its thing. As an index, of course, we finished a little bit lower on the day, as you can see off to your right-hand side of your screen there. And earnings season is just getting started. Now, earnings season was going really well. We were trending above the historical average. Typically at this point through earnings season, we see 68% of companies beating on earnings. Well, that's starting to fade away here. We're starting to see a little bit of weakening thanks to what happened yesterday with Microsoft and Alphabet and, well, what's going on after hours here. The MAGA stocks I keep talking about there. This important week for them. Only 9 times in history have they reported in the same week. They historically drag the markets down. And, well, what do we have happening here? We have the markets being dragged down. In particular, the NASDAQ down over 239 points. So a really rough one for them. Remember, the average loss for the week when these guys all report in the same week, that'd be Microsoft, Amazon, Alphabet, and Apple there. The average loss is 1.12%. So that's just trending right along. There's nothing odd about that, right? The way the market's behaving right now is perfectly within line with what you would expect. The Dow, there you go. It's the best performer. It continues to be the best performer. I will say that I think Boeing weighed on us a little bit today. Yeah, Boeing weighed on us a little. We'll cover that here when we get to stocks in the news. If we're looking around, I want to cover a couple different things here. If we're looking around sectors, oil up to almost $3 today. That higher low looking more and more there. Now, I saw some comments out there about green energy and fossil fuels, and I saw a comment that you got to be careful. People were picking on Chevron, saying how fossil fuels. I get it. People want to move to a green environment, a green energy kind of solution there, but you can't pick on someone like Chevron or ExxonMobil, even though it seems like you can there. While they are profitable, what's wrong with that, right? Profitable company there. They are almost more green than ExxonMobil. Did you know that? Right? So Chevron, ticker symbol CVX, is what you're looking at there. What's going on? Why are they behaving so well? It's because those greedy pigs are selling less oil and they're driving up the price there and they're not doing anything great. Well, actually, Chevron, if you look into, you can actually look on their website in their investor relations section there. They're building enough offshore wind farms, and this isn't like 20 years from now. They're doing this. This is about to go online to supply basically the entire southeast of the United States with electricity, right? Where did they get that money from? That's a massive, massive investment that they're making, not in oil. They're making it in wind farms. They got that money from selling oil. They recognize the change there as well. And I'm not sticking up for them. I'm just saying these guys are making changes, ExxonMobil especially. And so another thing they're doing is they're actually just about to start producing what will turn out to be hundreds of millions of gallons of actual usable fuel by recycling plants, garbage. What was the other one? Kitchen grease, right? Using kitchen grease in there. And this is, again, not by like 2050, we're going to be super green, it's going to be great. This is all happening right now. Again, how can they afford this? Selling oil and investing in green energy. So you got to be careful about the headline talking, political talking points there when you look at individual companies. It's easy for the White House to pick on Chevron and ExxonMobil, and all those guys out there. But in fact, if you look through Chevron, if you look through all the publicly traded companies that in the energy space here in the U.S., they will spend more on the development of green energy than producing oil. Right, next year. That's not starting years and years from now. So careful about that one there. And more importantly, I don't really care what your beliefs are, but more importantly, we don't want you to miss an opportunity. So if you believe in the green energy space and you're not really looking at the traditional big guys there, you might give them a second look because they're recognizing the shift. They're actually making the change there. And they're going to make a profit at it too, right? So they've got the money to back them up at least for now. So I did want to point that out because I fall for it too. Every now and then you see a headline and you're like, oh man, those boogers, how dare they? And in reality, when you look a little deeper, you go, not fair how they worded that. I do want to point out home builders here. It is still outperforming the overall market and showing relative strength relative to the market as well. Why is that? Why would home builders be doing well when in fact we have, did I share this with you? Here's the price of homes month over month. So this is the month over month change in the price of homes, and I'm reporting it as a percentage here. All you really need to see is where we were and where we came from. That is the most rapid decline in home prices in history. If you look all the way over here and go down, we're going back to the 91 and 1990 to show that. So why would home builders be doing so well? Remember, home builders last year, we talked about this a lot when they reported earnings. They said, we're just going to stop building new homes now when things were great. They said, we're just going to go through some of our inventory. And everybody was mad because it was driving up prices for new homes. Oh, who's the smart guy now, right? So they're not caught with a bunch of in-progress homes and inventory and stuff. They're actually sitting quite pretty right now, and I think people realize that. Now, I wouldn't make that bet. I'll be honest with you. You go looking at something like this, and I keep pointing this out, relative strength is stronger than the market and everything. There's no way I would bet that stays that way. I'm just saying for now, that's quite interesting. Realize why strength is in an area. Then you can make the decision if you want to invest in something like that. Fun fact, San Francisco was the worst. I had to look into it. You guys know I had to do it. San Francisco had the worst month-over-month decline, 36% in home prices. Yo, man, that is something. LA, San Diego, Seattle, Phoenix, and Denver were all down 20% or more over 1 month. Is anybody from there? Have you noticed that? Because that just seems, could you imagine? Like you have something of some value and it loses 20+%. That's impressive there. We've been lucky here in Tampa, apparently. We've only seen a 5% decline month over month in home prices. And Miami, believe it or not, only 1%. So we got kind of lucky here in Florida. But boy, if you see your price of your home pulling back, you're not alone, right? And that makes you go, do I want to invest in home builders here? Would I be interested if they pulled back again and it looked weaker, considering that they've obviously already priced in the next, 2 quarters, maybe 3 quarters? That might be kind of interesting. Okay, I rambled a little bit there. Our Wine and Wealth tomorrow, by the way. If you're a client and you're interested in the Wine and Wealth, Eric's going to be going over the changes in the tax brackets, the IRAs, the 401ks, all the numbers that have changed there, as well as some of the rules that have changed as well, and going over the strategy, right? When things change, ask yourself, how do I make something better of that? How do I get the advantage? Somebody's getting the advantage out there when the littlest things change and you just sort of play them off and go back to life. What's your advantage? How are you going to get to it? Go get it, man. Get that dough. All right, stocks in the news, because there's a lot of them, so I'm going to jump over here real quick. Chipotle, you might have noticed that fell about 7% here today. They raised prices, which offset less total tickets. Why aren't we mad at them? Right? Shouldn't they be lowering prices? No, it's the oil companies we're mad at. Oh, no, let's get these guys to lower prices. Anyways, new store sales, meaning new built, brand new, grand opening. Store sales have been weak. So that's a little bit of a negative there, meaning they spent a lot of money to open these stores and the sales are weaker than we've seen with other new stores. So that was a negative. Do you guys know what their throughput means? If I told you, here's a fun lesson for you. Oh, man. Here's a fun lesson. If I told you that Chipotle's throughput was in the low 20s, when historically it's in the high 20s, do you know what that means? That's one of their fun metrics, like Netflix and subscribers, like Disney and ticket sales. Chipotle and their throughput. Throughput is how many meals they can make in 15 minutes. How many people can they through the line in 15 minutes? They're in the low 20s, meaning 20 meals, where typically they're pushing 30, right? So peak efficiency is not quite there. They've had a lot of turnover last year, 200% turnover in employees, by the way. They made sure to point that out. But nonetheless, that's what you see as some of the weak underlying metrics where people look at and go, I see what you did there by raising prices, and that offset some of your sales, but why'd you have to do that? Because you're not cranking out as many meals. It's not as efficient. You've got employees that haven't quite jumped on that efficiency bandwagon yet, and they will. Apple, I don't know if you saw this, it's about 2 weeks old, but this is official from them. They are going to comply with the USB-C charging laws in Europe. think it was. They said, hey, you can't have your own thing. You know, I'm not an Apple guy, but Cody, you got do they have their own plug, right? It's annoying. Hey, so in Europe, they said, tell you what, you can't have that. You need to have Type-C because everybody has Type-C. We want you to... Oh, the iPad's got it. Yeah, I do got that. That's true. So they said, you got to do that with the phones. And Apple's like, you can't make us do that. And they fought back a little bit and they said, okay, fine, we'll do it. Guarantee you, they just say, okay, no charging plug. Now you have to buy the wireless charger. And the new phones won't even have little dongles in them or whatever they call them. Anyways, enjoy. I'm not an Apple guy, so I don't have much else to offer to that. Nope, it's going to be this one. There you go. Mobileye. So those of you that work for them, you probably know here, but Mobileye went public here today, up 37%. They did much better than expected. You haven't seen many IPOs this year, have you? Not really a good time to have an IPO. Why would so Intel owns most of Mobileye, right? Why would they do this? They need the money, right? Intel needs the money. This IPO, if you bought this today, their attempt here today was to raise 870 million, or I don't know what it was, 871 million, something like that. 800 of it is going back to Intel. So you essentially just invested in Intel because Mobileye didn't really need the money. They went public, spun it out of Intel so that Intel could get 800 back in the form of a loan payment there. So rather crafty financing by them and it was pretty obvious because we haven't seen IPOs. It's not a great environment to be going public. Intel said, we have to do this, right? We maybe would have been able to get $1 billion at some point. We need the 800 million, so go ahead, push it out there. We'll take what we can get. So a little bit negative there. Boeing. Free cash flow was about the only good thing you could look at in terms of Boeing's earnings reports there. No updates on the 737 production, so we don't know how many they're cranking out. The 787, they're only cranking out 3 or 4. They're trying to get it up to 5. Very slow production there. Not a lot of good news with Boeing, but there was a lot of good news with Harley friggin' Davidson. Yeah, if you know, it was a public company. We owned this until about June of last year, and we sold it out of our portfolios. But it's looking really good. It's been dead money for a while, so we haven't missed out on anything as far as clients here are concerned. But profits up 60%. Right there, that's enough for people to go, I'll take it, right? 12% gain on the day. They sold 20% more hogs, even after, remember, they shut down a little bit in May. So they shut down a little bit in May. What we're finding out now is they shut down in May and they said, tell you what, let's make our most profitable bikes and then flood the showrooms with our most profitable bikes, just in case, right? So if we do that and people can't buy our less profitable bikes, we'll make more money and this should turn out well. It worked. Great. I mean, strategy, execution, and reward. They did it. So there's not much else to say about that. Great job. Meta, well, actually it's META, not Facebook anymore. Missed on earnings, revenues beat. Revenues were still less than expected. If you look at the stock after hours, it's down quite a bit. That's a new low. Now it's getting to a point where it's so cheap, you almost have to take a shot, right? You're probably going to hear that argument here and there. Monthly active users on Facebook up 2%, daily active users up 3%. I bet you I know why that is. Ad impressions, the number of ads that went out there were up 17%, but price per ad down 18%. That's the opposite of Chipotle, right? So they cranked out more ads, but they got less money for those ads. So that's that one there. And by the way, I want to point out Forex headwind. There's your drinking word, headwind. Forex headwinds about 7% of their total revenue for the rest of the year. So again, if the dollar falls, that means less headwind for them. We start saying tailwind, right? And that means the stock get a little bit of support there. Got a couple more for you here. We've got Twitter. Inching closer and closer to the 5420. Elon Musk goes into Twitter today, literally holding a kitchen sink. So it is believed now he's welcome in the building. This deal's about to close. They're just signing checks and dotting their I's and T's and all that stuff. So the deal expected to close on Friday. Ford comes out with earnings. Ooh, that's a tough one for Ford. Hasn't really fallen all that much after hours. Did recover a little bit. They are not going to continue with their fully autonomous self-driving software. There's a partnership that they had there. It's called Argo AI, I believe. It is. And so they're not going to continue with that. Unfortunately, that means they're going to have to write off a loss of $2 billion freaking dollars there. So they're not giving up on it, by the way. They're just going to work on sort of self-driving for the moment. So very quickly, these big guys are finding out how expensive it is to try and quickly join the self-driving electric market. Right? Not cheap. If Harry was here, he would be rolling and laughing and having a good time with that one there. Anyways, I'll take your questions here. We did ramble just a little bit today. I felt there was some pretty interesting lessons to share with you. I hope you felt the same. I will take your questions and see if I can actually see them. And then we will go from there. Yeah. Alphabet, Meta, Amazon, Microsoft, already 25% of your portfolio. Makes sense to dollar cost average on the way down, making it even bigger size on your portfolio. Well, if you're about 25% of your portfolio, if you have both classes of the Alphabet shares, then technically you're pretty much, if you just bought the rest of the index, you're kind of just trending along like the S&P there, because that's the size of the portfolio there, so, or of S&P. So I think I would lean towards Meta. And I don't really believe in the metaverse thing at the moment. I haven't been sold on it. Maybe there's something there. But I think that the stock price now has gotten to a point where fundamentally it's just ridiculously cheap. It's got to be cheaper than any one of the other big guys there, the FANG stocks and all the others. So you're going to find a point where people say, okay, yeah, times are tough. They're really shooting for a big prize at the end of the tunnel here, but got to take a shot, right? It's so cheap. How can you, have you ever had the chance to invest so cheap in this stock? So I think that's probably what you end up seeing there. So I wouldn't mind dollar cost averaging. I would just lean a little bit towards Meta if you have limited funds there. Yeah. By the way, well, we did talk about those. Okay. I like it. The inverse funds. Well, inverse funds have been a lot of fun lately. Remember, those are just day trading funds. Those are not meant for holding overnight. But wow, right? A lot of volatility there as well. When you multiply or magnify something by 2 or 3 with the volatility we've had in the market, yeah, you deserve it if you can hold on to that Bronco. I did see the results of Enphase there. Very nice, very nice. That's cool. We talked about that in the Wine and Wealth class, specifically what to do with that stock ahead of earnings. I love it, Paul. Financial wisdom. You're going in Alibaba versus Meta? Ooh. Well, you don't know what they're thinking over there. That's a tough one. That's an extra. I mean, I get it. It's sold off, everything. It's extended, but it's a tough one. I would not be able to think so risky as you. You think Meta's got a ways to fall? There you go. Yeah. Unfortunately, that metaverse, I read the whole study on that, how much your eyes can actually handle what they've developed in terms of trying to eliminate some of that. That's a big headache there. The amount of degrees your eyes can see without straining and everything. It was a little bit over my head, but major uphill battle there. Not just from an entertainment perspective or a purely utilitarian, I don't know, like what are we doing with this thing? But real questions about the physical strains that it may be putting you there. Afro Invest, you think we're going to rally to the end of the year? I'd have to take the odds on that one and say, yeah, we would rally to the end of the year. I think if I had to pick something that could ruin that plan, it'd be full control of Congress, Democrats taking full control of the House of the Senate, and of course in the White House. Yeah. Yeah, you got to believe in the metaverse for sure. You got to believe in everything they're doing there. It's lofty, They know that too. It's something. I can't do it because it would make me sick. Now I haven't had the Meta, whatever they call these things, the Oculus, but I don't feel good when I use that thing. And the games seem kind of fun, but I just don't feel great. So for me, I'm not. It's not for me. No. Holding on to a January 2024 sold a put on Meta. I didn't see a strike price there, but you got plenty of time, of course. Yeah. You think others will beat Meta at the game? Ooh. I don't know. it's I feel like some days maybe I'm just getting old, I'm not interested in that thing. I don't know what they're doing there. But it seems like that's the general consensus from people is I'm not sure about this metaverse thing you guys are working on and the headsets and everything. But we'll see, right? In the meantime, we'll wrap it up here and see you guys on the flip side. So I appreciate you guys hanging out. Hope you learned something here today. That's the whole goal of what we do. Of course, it's marketing, and I wear the shirt and subliminally, and I point out stuff. You get that. I'm not fooling anybody. But generally, I hope you learn. The more you learn, right, the better you are. Hopefully, more dollars in your pocket. That's the whole goal there. Enjoy the rest of your day, and we will see you tomorrow. Adios.